We have elected to put our money and faith in a mathematical framework free of human error and politics.
Ultimately, these things are stores of belief, aren't they?
Don't you think that the society doesn't really understand that?
Cryptocurrencies, there's a lot of rubbish out there, but together they represent a new asset class.
Unlike gold, this belief may disappear into thin air.
Is it this the state slightly catching up on an asset class that has emerged?
What do you think is the reason for people like Sen Warren to go against cryptocurrencies?
The demographic of people in her state are quite old and quite negative for crypto. I think it's as simple as that.
She wants to get re-elected.
Hello, and welcome to Capital Horizons, the podcast where money meets politics. I'm Igor Yelnik, CIO of Alphidence Capital. My esteemed co-host today is a man who has served in 4 British governments, Sir Michael Fallon. Our special guest today is James Butterfill, Head of Research of Coinshares, one of the first institutional-level companies to deal in crypto assets. Hello, James.
Hi, pleasure to be here.
All right, so why wouldn't we start with the recent event whereby the Securities and Exchange Commission in the US permitted distribution of ETFs based on Bitcoin? Do you think it's a big decision? It's a small decision? It makes no difference at all?
I think on the face of it, just improving access to an asset class shouldn't really have that much of an effect. But the difference here compared to other asset classes is this is a brand new asset class. And for that reason, I think many regulators around the world have struggled to figure out exactly, to understand it and understand how to regulate it. And the reason why I think this is so pivotal is that it's specifically the US, the SEC, the largest regulator in the world, looking after some of the largest wealth management assets in the world, $14 trillion worth of wealth management assets. So the SEC approving this has suddenly given it recognition, I think, by the largest regulator, and also given $14 trillion access for the first time to Bitcoin in a regulated form. So I do think it is a really monumentous moment. And we've seen that. We've seen, I think, nearly $9.5 billion of inflows into new Bitcoin ETFs in recent weeks since launch.
Do you think, James, this is the state, if you like, giving some formal sign of approval, or is it this the state slightly catching up on an asset class that has emerged quite rapidly from nowhere that it previously hasn't really got any regulatory control over?
Its stance until its court case with Grayscale 3 months ago was pretty aggressive, and I think people were being frustrated. The approach was very much regulation by enforcement, and I think many Americans felt that their sort of civil liberties were infringed. And what was very interesting in that Grayscale court case was that the decision was a unanimous one and a bipartisan decision. And I think it was partly to do with civil liberties. And since then, actually, the SEC have really changed their tune. They're much more sort of fine. If you think this thing's okay to invest in, we'll give you access. Mm-hmm. I still think their attitude is still a bit negative. And we will see, I think, negative soundbites coming from regulators in the coming year, particularly around exchanges. And in my view, quite rightly so. There are still some exchanges where you can open up an account and on the first day get 100 times leverage. In my view, that's not right. And so I still think we'll hear some negative soundbites, but I think there's a reluctant allowance of Bitcoin.
James, you mentioned that Bitcoin was an asset class. When Bitcoin started, we called it cryptocurrency. Now, you're not speaking about it as a currency. Now you're speaking about it as an asset.
Just to go on record here, I've always called it an asset class and an asset. I think cryptocurrencies, there's a lot of rubbish out there, but overall, together, they represent a new asset class. And I think, you can get awfully philosophical about what an asset class is, but you have to think about what it represents, what's its investment objective, how fungible it is, all those kind of things. And the most obvious one is to look at equities. it is ownership of a business, and its investment objective is I suppose, a form of real income in some respects. Commodities are ownership of goods with an end use. Fixed income, it's ownership of debt, be it government or corporate debt. With Bitcoin, I'd say it's best defined as a ownership in a peer-to-peer monetary ledger system. That's quite different, I think, to any other asset. And other cryptocurrencies have some features like that, not all of them. There's quite an eclectic mix. And in my view, its investment objective is it's specifically Bitcoin. It's a non-sovereign store of value. So that's something that the state can't control, and that has both positive and negative connotations associated with it.
But why do you believe that it's a store of value?
This is a really important point here, and I need to get into a little bit of the technicalities around Bitcoin. So stop me if it's too difficult.
Please go ahead.
I'll try and explain it in a sort of, I suppose, a sort of fund from a fund manager's perspective, is what I used to be. On a very basic level, I think it's best thinking of Bitcoin being the first thing on the internet that you can't copy and paste. And how have they achieved that? So everything on the internet, really, you can kind of copy in some way. They achieved that through solving what they call the Byzantine generals problem and a double spend problem. Now, the Byzantine generals problem is a millennia-old war challenge or difficulty of trying to get generals within a war to cooperate with each other, and they need some sort of economic incentive to do that. This is outside of Bitcoin, really, and I think it's the same with Bitcoin. You need a big network for people to use it, but you also need an economic incentive for people to use it, and that's where Bitcoin mining came in. There was if you mined Bitcoin, you get an economic reward from it, that is the Bitcoin. At the same time, you create a large network. And that's really important because this network is immutable. It's not something that I or you can change the monetary policy of. It has a very well-defined monetary policy, being one of 21 million coins, and you can't change that. No individual can. You would need 50% of the network to do that. And given the size of the network now, it's so huge, I don't think even a government could achieve it, on both from a logistical perspective and from an energy perspective. Now, onto that energy point, it does consume energy. I think that's what gives it value. If you could just pick up gold off the street, it would have no value. The fact that energy and manpower and time has gone into extracting gold from the ground, and that it's rare, gives it its value in some respects. And I think it's the same for Bitcoin. It's the same concept. In fact, when Bitcoin was created, Satoshi Nakamoto created the first block on the same day QE was announced by the Bank of England. So it was very much a nod to the loose monetary policy efforts of central banks around the world. And it also, through this network that you cannot change, that is immutable, it solved the double spend problem as well. So I know that's a kind of a long answer to your question, but ultimately it is this large network. It's a thing on the internet that you can't copy and paste. It is a finite store of value. And as a consequence, it is a store of value, or it's probably better described as an emerging store of value, because it's still very volatile. It has, at the moment, 40% annualized volatility, which is actually trending down quite quickly. It was 250% 5 years ago.
Volatility tends to be the revert.
Still fluctuating quite a bit. But James, given the immutability and given the fact it's now quite large, these networks are quite large, where does that leave the central banks?
Just to your point about it being large, it is huge. I mean, Bitcoin's daily trading turnover now is $10 billion a day. That is, so the London Stock Exchange trades $4 billion a day. So it is becoming a very big network. And it's a really good question. Where does it leave central banks? Well, what central banks do? They issue currencies and manage monetary policy. I actually don't think that's going to change. There has been this concept, and this is, Igor, to your point about it being a currency. I think that's a misnomer. Actually, It could be a currency, but we can come on to that later. But I don't think it needs to be one. What it is a store of value. And I think gold could be a currency, but it's not a very good one because it can't transact very quickly. Same thing with Bitcoin, in fact. But it needs to be the store of value. Now, that's not really competing with central banks. They have existing monetary assets, like sterling, for instance, and that trades very quickly. They can flex monetary policy to influence the economy, in a both positive and negative way when required. It's quite different, I think, to Bitcoin. The thing is, I think Bitcoin almost keeps nefarious central banks in check. If you decide to print like mad, people will just start to use something like Bitcoin. Now, we've seen this in emerging markets. If you take, say, Turkey, monetary policy is absolute mess there. It has some of the highest ownership of Bitcoin in the world, and a lot of the grassroots growth, organic growth in Bitcoin is coming from emerging markets, countries which have high political instability or economic instability. And now Turkey is a classic example. The Turkish lira has plummeted. On a relative basis, actually, Bitcoin looks very stable. And actually, we can even come here to the UK. Liz Truss and her wonderful unfunded tax cuts caused a massive crash in sterling. And what was very interesting, on that day, we saw Bitcoin averages around $70 million a day in the UK in terms of turnover. It shot up on that day that those unfunded tax cuts were announced, and we saw a big depreciation of sterling. It shot up to $900 million a day. So if your currency starts to look like a bit of a basket case, people will start to use something like Bitcoin. Now, we're in the developed world, and generally we're sitting on currencies that are pretty stable. So there's less of a need for it. But that's exactly why we're seeing emerging markets, countries, and its popularity rise there more first.
So this is keeping central banks honest.
I think so. It has that function. What's really interesting inside of all of this is central bank digital currencies. And a lot of people said, yes, won't they, once they've launched, won't that mean the end of Bitcoin? And ultimately, central bank digital currencies just represent a fiat currency one for one. So there's no difference, but there's real technological advances, so you can improve accountancy processes. You can collect tax much more efficiently. You can grease the wheels between international trade much more quickly. And settlement processes can be very fast. So there's some really positive things to it, but there's also a dark side to it.
The storage of information, for example.
Yeah, and if everyone moves to a CBDC and a cashless society, then suddenly the government has the ability to impose negative interest rates. They may feel that your diet is not good enough and you should be only having healthy food. They could technically alter the CBDC to use specifically so that you so you can only buy things from certain shops. There's a massive, and I think CBDCs will hit the buffers politically because there's massive privacy issues around CBDCs. And yes, in the developed world.
Don't you think, James, don't you think that the society doesn't really understand that?
Yeah, I think China is going blindly into a CBDC where it's the most popular. They have one called the DC/EP, but it's kind of a totalitarian regime, isn't it? So it's perfect for them. But yeah, I don't think people realize that. And, the other thing is if you can impose negative interest rates on people or tailor an interest rate to an individual, I think that's when people will suddenly start to think, oh, okay, what alternative is there out there for me? And that's why Bitcoin it keeps governments in check.
Yeah, possibly. Getting back to your point about the value of Bitcoin, when I think about gold, it's been store of value for the last, 4,000 years, 5,000 years. I can safely extrapolate and believe that in the next 1,000 years, which is certainly enough for me, this shiny metal is still going to be serving as store of value. With regards to Bitcoin, there is a certain small cost to produce it, and then there is this belief that it's going to serve as store of value. Unlike gold, this belief may disappear into thin air very quickly, and then the whole thing will become completely useless and its price will go to zero.
Yeah, I mean, I think you're touching on human nature here and the subjectivity of valuation. And in fact, we do have, I used to be an equity analyst, there's subjectivity. Why was Amazon trading on 900 times price to earnings? Isn't that too much? Some people had the belief, and I specify belief, they weren't extrapolating out income at that point or dividends and saying, okay, it's worth that much. They had the belief that it was going to grow. So I think you can create that argument, and that subjectivity of valuation straddles all asset classes, actually, including gold. You don't look at the amount it costs to extract gold and say, okay, that's the marginal cost of production is the value. The marginal cost of production, I think, for gold now is about $600 or $700, and yet it trades at 2,000. There's something else outside of gold that's giving it the extra valuation, and the same for equities and at times. This is human. I think what we're looking at here is human nature and the subjectivity of valuation. So I wouldn't pay $100 million for a Monet, but clearly some people would. And I think some people say Bitcoin should be worth zero. But my pushback there is, well, go out and get me that free Bitcoin. I'll happily take it from you. The reality is it's not there. It's a deeply liquid market. And there are many people that have the belief that it does have value. And I call it an emerging store of value because I think people are starting to cotton on and understand Bitcoin better and see that it does. I mean, Bitcoin and gold have a huge amount of similarities, actually. So they're both scarce. They're both very durable assets. They're highly fungible. I'd say Bitcoin's a lot more portable than gold. You can't sprinkle gold down a telephone line and give it to someone, whereas you can instantly with Bitcoin to anyone across the world at virtually zero value. And so its transferability is very, very high. And I'd say actually, compared to pretty much every other asset class, it beats it down, hands down.
Except, James, gold is only one. There is no other gold, right? And with Bitcoin, somebody created this beautiful algo 15 years ago. Maybe as we speak, there is some smart guy or girl sitting next door and creating a better version of Bitcoin. I don't know how it's going to be called. Let's say Bitcoin, and this version will take over the world. Everybody will forget about Bitcoin all of a sudden.
Although better coins out there, there are technically better ones. I think Tezos is technically brilliant and solves many problems, but it's a bit like looking at the US dollar. Technically, it has problems. There's a lot of QE in the dollar. People have been diluted as a holder of the dollar and sterling for many years. Technically, it's not great, but people use it a lot.
Ultimately, these things are stores of belief, aren't they?
Gold is very much so, in fact. And again, I think many equities are overvalued. You're looking at a store of belief there as well. And it comes back to the point of the subjectivity of the valuation. And it is slightly a self-fulfilling prophecy. So fundamentally, to your point about Bitcoin and couldn't something else just suddenly come along and usurp it? I think it's incredibly difficult to. In fact, there's quite a few times Bitcoin's been challenged like that. So the really good one is it was called the block size wars back in 2017, where people are arguing about the functionality of Bitcoin not being good enough. So a group of people created Bitcoin Cash, which is technically better. It could transact a lot quicker. It had a greater number of coins, etc. Bitcoin Cash was popular for a short moment, and now it's died a death. I think it might be still in the top 50. There have been quite a few times people trying to sort of challenge Bitcoin. But ultimately, what it has above all the others is a very big network. And there's probably some better social networks than Facebook, but Facebook is very popular. It has that big network, and that's why people use it. And I think it's the same for Bitcoin. We can probably pick holes in it, but it is the one that everyone uses, and it's been tested so many times, and yet it reigns supreme.
It costs quite a lot of energy. It takes quite a lot of energy to mint a Bitcoin. What do you think about the environmental effect?
No doubt, hands down, Bitcoin, when it's been mined in the past, it has there were people mining Bitcoin using coal power in China, and yes, it's been a dirty business at times. that is improving dramatically, actually. So if you look at the number of grams of CO2 per kilowatt hour, that's probably a good measure of how dirty it is. 3 years ago, 4 years ago, it was 600 grams per kilowatt hour. Now, if you look at the financial industry at the moment, it's around 400 grams per kilowatt hour. Visa alone is probably about 400, maybe 500 as well. Bitcoin, since a lot of mining collapsed in China and people moved elsewhere, they've been increasingly hunting out renewable energy, because if you want to be competitive as a miner, you have to have the lowest energy costs. And it happens quite often to be stranded energy sources, which quite often are renewable sources. And what we found actually is the grams per kilowatt hour now for Bitcoin have steadily dropped, and they are now at 300 grams per kilowatt, or just under 300 grams per kilowatt hour. So that's about 54% of the network is sourced sustainably now. So that's very positive. That's way more than the financial sector right now. And there is this prevailing narrative at the moment in the media that it's just dirty and it's terrible for the environment. And Senator Warren in the United States is really pushing this argument. And I'd say they're not looking into this deeply enough. A really good example, I've just published a report about Bitcoin mining where we talk about this. At the moment, there are various hydroelectric power plants in Africa that are not sustainable. They can't make ends meet. So actually now they are operating because they are mining Bitcoin on the side, and it's subsidizing the power generation. And so that's a really increasing initiative in Africa, where they're mining Bitcoins to subsidize renewable energy projects.
Excuse me, James. So what you're saying is that African countries are now starting to export Bitcoin.
Yes. Yeah, and use it to fund and subsidize renewable energy projects. And it is actually literally turning the lights on in various African villages.
I know you said that you don't think that crypto assets, or digital assets, should be considered as cryptocurrencies or a potential replacement for fiat currencies. But nevertheless, this is quite a common argument. And to me, one of the biggest obstacles is if a country introduces some form of digital asset, uncontrolled digital asset practically, into circulation, then it loses part of its sovereignty. And no developed country would ever allow for this to happen.
Well, I'd say, any country that is pegged to the dollar at the moment, and there are plenty of them, have lost an element of sovereignty already, haven't they? There are this, I think, suits small emerging market countries like El Salvador, that they adopt something like Bitcoin. I actually see problems with that. Having the Bitcoin standard, a bit like the gold standard. Well, we know the gold standard didn't work particularly well. This is a big unanswered question post quantitative easing, isn't it? Post Bretton Woods in the 1970s, we really changed the way we apply monetary policy. It's left governments heavily indebted, actually. This question about whether existing monetary policy is effective or not is unanswered, in my view. And actually, a lot of our clients are buying Bitcoin because they don't quite know what the end game is with QE. It looks like the US would probably start QE again this year at some point, and maybe Europe. Where does it all end? I don't know the answer to this. But that said, I don't think the Bitcoin standard would be good either. I see probably this kind of parallel thing where people use both existing fiat currencies and Bitcoin together. So a Bitcoin standard would only really work if we totally abandoned existing monetary policy practices and stop printing.
Which is quite unlikely, isn't it? Because first of all, as I said, it's a loss of sovereignty, and the second thing is that printing money uncontrollably let you inflate out the debt, and this is a stealth tax. And Bitcoin, since it's the number of coins is limited, is by nature deflationary. So this is not what current states can afford.
We only had real inflation problems since modern monetary policy has come along. I just think the economic upheaval to switch back to an asset that is deflationary would be huge. It may well happen in our lifetime. I don't know the answer to that. I think what's really interesting is I heard someone say once, an investor in Bitcoin say, we have elected to put our money and faith in a mathematical framework free of human error and politics. And I think that's really eloquent, because it tells you the problems with monetary policy at the moment. Now, I'm not saying that I have the answers or that Bitcoin is the answer to that. But it's a very interesting concept that just will not go away, Bitcoin. The number of naysayers that have come around and said Bitcoin is going to fail. There's an amazing Google Trends document. You can see the number of people said it's failed, and it's still here. And in fact, it's growing very rapidly.
But it may be that people take a long time to lose faith in a fiat currency. The gold standard lingered on for a long time. It may take a long time for that, what you're implying, for the collapse of current monetary policy to actually take place.
That's why I think central banks around the world have, until very recently, been actually incredibly negative with cryptocurrencies. There is an undercurrent, I think, at the SEC and the Fed that they don't like Bitcoin because of the way it threatens existing monetary policies.
There is another interesting thing. In order to buy a Bitcoin or any other cryptocurrency, you still need to go through some kind of centralized system. All of a sudden, we introduce these intermediaries into the system, and the system which was designed to be non-centralized becomes pretty much centralized, and you have your counterparty risk like you do in operating in any other assets, except in this situation, these counterparties are not always regulated.
This is quite a perverse situation, actually, because if you read Satoshi Nakamoto's white paper, it talks about getting rid of centralized parties. And yet here we are, FTX collapsing and incredibly nefarious practices, commingling client assets, etc. And there's a long list. Perversely, people felt the easiest way to own Bitcoin was, in fact, just to go through a centralized exchange with really poor custody controls. But it doesn't have to be that way, actually. There's a growing amount of investors using decentralized exchanges now. So most of the new ETFs in the United States are using Coinbase Pro, which is a decentralized exchange by the very nature of it. And in fact, there is a growing, so you can critique Bitcoin, you can say, well, it doesn't trade very quickly, which is true, but there is a layer 2 solution now for Bitcoin, which is growing as well. So when I talk about layer 2s, it's perhaps best looking at the US economy again and thinking, you've got Visa, which is a layer 2 solution. It's a payments aggregator, lots of mini payments aggregated into one big chunk. And it uses the Fedwire system to move big chunks of money around. And the Fedwire system is like Bitcoin. It's slow to transact, but it can do very large transactions. And so you've got Visa as a layer 2 and the Fedwire as a layer 1. And with Bitcoin, it now has several layer 2 solutions. One of them is called Lightning, which is what El Salvador has adopted. And there uses a decentralized version of Bitcoin to transact very quickly and very cheaply. So those solutions are disappointingly slow to pick up, but I think they are starting to grow. But admittedly, I think I would have liked to have seen 2 years ago when Lightning was really launched for it to see high growth in this. But where it's being used the most is in emerging markets.
James, why wouldn't we move from philosophical issues to more practical things? Let's imagine that you are an asset owner, you are a pension fund. Why should Bitcoin or any other digital asset be part of your portfolio? Or shouldn't it?
Yeah, so I think for several reasons. The key one being diversification. So I wrote a paper called "A Little Bitcoin Goes a Long Way" 4 years ago now, just looking at how it performs in a portfolio and how it can enhance the Sharpe ratios. So if you take a 4% position in Bitcoin, for instance, and had invested in 2015, now you could argue that's quite a favorable period of time, but actually Bitcoin's endured some big bear markets with a maximum drawdown of 83% over that time period. But you would have enhanced annualized returns if you just let it drift. You bought in 2015, let it drift. in your portfolio, a 60-40 portfolio, you would have enhanced your annualized returns would have been 42%. So fantastic. Big problem with that, though, is the volatility. You would have, in fact, before I come to that, you'd say diversification. Your correlation to your benchmark, i.e. the 60-40 portfolio, would be only around 35%. So it massively decorrelates. So that's a really positive thing.
James, this could be true 4 years ago, but if you look at correlations more recently, then you will see that Bitcoin has been quite strongly correlated with risk assets.
That's a problem. If you let it drift in the portfolio, it creates a big volatility problem. Your volatility is huge. Actually, if you regularly rebalance Bitcoin, in fact, since 2015, you say every quarter you rebalance, you would have only increased your annualized vol by 100 basis points if you rebalance every quarter with a 4% position. In fact, your annualized returns would still be double that of the 60-40 portfolio. So since 2015, your annualized returns on a 60-40 portfolio would be 7%, would be 14% with Bitcoin. And your maximum drawdowns only increased by around 150 basis points. And yet it still diversifies your portfolio by 7%. And if you look at the Sharpe ratios, your Sharpe ratio on, say, a 60-40 portfolio is about 0.5 over this time period. It would be 1.15 having a 4% Bitcoin position. So on a risk-adjusted basis, actually, Bitcoin's performed really well. Now, the important thing is, you could say, I've taken a favorable period of time here. And in fact, as you rightly point out, there have been periods when correlation with Bitcoin and, say, equities has risen dramatically. In fact, Bitcoin correlation to the NASDAQ was at 72% in August 2022. Historically, it's not been that. It's just kind of oscillated around the zero mark. And then it did have a bit of a spike in correlation when COVID hit. But every asset class correlated during COVID massively when we saw the price crash. And I think actually Bitcoin at that point was being used as a source of liquidity of last resort. But specifically, why did Bitcoin and equities suddenly correlate with each other? And my view is actually the Bitcoin bubble burst because of monetary policy. It's a store of value that is competing with other stores of value. So when rates rose, suddenly actually treasuries look way more attractive. And so that burst the Bitcoin bubble in early 2022. At the same time, it wasn't great for equities either, but for a different reason. Equities is sensitive to monetary policy because rising rates squeeze margins. And the two went down together because of the hawkish policies from the Fed. And that led to a very high correlation at that point. But that doesn't mean to say that it should stay the same. And in fact, what we've seen is since the Fed started backing off in early 2023, they started tapering their rate rises. And then they stopped in July. Actually, Bitcoin's really rallied, whereas equities has not done anywhere near as well. And the correlation has diverged dramatically to the point now where actually the correlation between the NASDAQ and Bitcoin is negative at the moment. So it was momentary, and it was to do with monetary policy that caused that high correlation. Now, if you were to say to me, I think the Fed's going to be really aggressive and hike rates really aggressively this year, I think we'd see that rising correlation. Bitcoin is this interest rate sensitive asset and trades very much like that on an intraday basis when macro data is published.
Do people use any other ways of making money out of cryptocurrencies than just pushing them passively into their portfolios?
Yeah, I mean, so we have a hedge fund, and you can look at the arbitrage between, they call it the basis trade, the arbitrage between the futures market and the spot market. And quite often that spreads quite wide. You can exploit that. We have various quantitative and momentum strategies. So yeah, I think there's plenty of room to adopt various systematic strategies to outperform the Bitcoin price. Now, I think like any asset class, you have to be quite adaptive in your strategies. Over time, the returns on those strategies diminish.
I think that the political case has certainly been undercooked. The figures you gave on energy and the extent to which it can help in the developing world. These are all very powerful supporting arguments that I haven't heard out there.
I really want to try and lobby. So I know Sir Connor Burns quite well, and I'm trying to say to him, hey, look, I'd really like to come into Parliament and talk about these kind of things. And we are back. So like the FT yesterday, Scott Cipollino, who's a journalist at the FT, just went on a massive tirade about Bitcoin and being bad for the environment. And it was so frustrating. He was quoting some already discredited reports, hugely discredited reports. And but this is the kind of thing we're facing. And I feel like I'm a little bit of a one-man crusade here. Well, I'm not. There are other people doing it too, but trying to really correct the false narratives out there. It's an uphill battle, but we try our hardest. But we have ultimately given up with the FCA at the moment and their current stance on it. At one point, the FCA were actively taking out keywords associating Coinshares with criminal activity. They were actively doing that. And we had to actually threaten to take them to court because we're not a criminal organization. Yeah, there are some in crypto, but that's not us. It's currently in the US with Senator Warren, and the narrative she's pushing are hugely frustrating. And there's currently a bill going through EU Parliament as well, the same thing. And we've been weighing up: do we spend a lot of money lobbying in Europe and the EU Parliament to do this, or should we leave it to other people? Because it's incredibly expensive for us to do.
Have you got a trade outfit? Have you got a representative organization?
So we have various PR firms,
but apart from PR, I mean, do you have a trade association like, say, British Venture Capital or whatever? You don't have a specific lobbying organization.
No, there is the one called the Crypto Climate Accord in the US, which we're part of, but there's nothing like that in the UK or Europe. No, but yeah, how do you start one of those up? I'm not sure.
Well, you get 10 of you guys, 10 of your firms to chip in.
Yeah. Maybe we should do that.
James, what do you think is the reason for people like Senator Warren to go on crusade against cryptocurrencies?
Well, she's been actively very negative of it, and in her, I think the demographic of people in her state are quite old and quite negative for crypto. I think it's as simple as that.
She wants to get re-elected.
Yes, and actually, so. And thankfully, most states where there is crypto mining going on, like Texas, they are quite pro. And actually, in the Texas elections a few years ago, Bitcoin mining became a real political hot potato because there was a real infrastructure problem with electricity networks in Texas a few years ago. And in fact, this company, very interesting company called Lancium, came along and were offering this load balancing. Because if you're a power producer in Texas, it's got to be profitable to be a power producer there. But because the loads were so variable throughout the day and night, actually it wasn't that profitable. So Lancium sort of offered this solution where they load balance. So at night when there's lower demand, they mine Bitcoin because you can't just turn off a power generation plant overnight. So they mine Bitcoin with that excess energy overnight, and then they power the state during the day. And so this is, I think, now 30% of the energy used in Bitcoin mining in Texas alone is sourced sustainably now, and it's becoming a big thing in Texas. There are places where it's just not necessary, but there are even things in the UK. So I've been speaking to an oil company here in the UK who have an oil well, and it's going to cost them $400,000 to cap that oil well. We could actually it's got around 5 years worth of gas rated at 1 megawatt that they could use. You could actually cap that for free if you put that gas through a turbine. So there's lots of really interesting solutions where this could be used. The thing is, most Bitcoin ETPs at the moment, we're all neck and neck with each other and not really cooperating with each other, but perhaps we should.
James, thank you very much.
Thanks a lot. It's been very interesting. Thank you very much indeed.
Pleasure. Yeah. Thanks for inviting me on the show.
Thanks for listening. This has been Capital Horizons.
So if you would like to see or learn more about Capital Horizons, please subscribe below.
From Michael and I, see you next time.